Welcome to this week's Closing Bell. I'm Jason Jacoby here with the legend Mark Boyer.
Legend. Wow, I'm getting better every week. That's what's great when you're older. You just get better every year. So
Oh, I
awesome.
like
No,
that.
because like your history, you don't remember things, so you just get better.
That's good.
It's
I
good
like
stuff.
it. I like it. But we're super excited to be here with you this week. Gonna try something a little bit different because of all the updated news for this week is below. We're gonna hit on some hot button issues or market analysis that we think might be pertinent and important for you moving forward. So, just a quick recap. All the major indexes were up this week over 3%. We had a nice rally and some breakthrough of some resistance levels, right?
Yeah, Wednesday had a follow through day, what we consider a follow through day, which is a nice up day on increasing volume. So the markets were have been trying the last week or so to try to gain some ground and get out of their correction mode. And so that happened this week. And so now we've seen 2 days of kind of strong markets here. So
So
um,
it's
not surprised
not surprised.
after the follow through.
Yeah, you've been talking about that,
Yeah.
and that's why you're such a legend, is because you really predicted a follow-through day like this,
I like the technical stuff.
and,
That's fun.
and all the market rallies that we've been having. But it's kind of some interesting insights. So, right, we've had the Nasdaq, which got hit the worst last year,
Yeah.
right, over 35%, up 16.5% year to
Yeah.
date so far. Dow's been pretty flat, which was the best performer last year.
Year,
So
yeah.
the laggards are leading, and the leadings are laggards.
Yeah. So the question is why? I mean, why is that happening? Why is the Nasdaq up so strong? I mean, you got the Nasdaq. Tesla's up 70% since since the beginning of the year, but it got crushed last year.
Right.
Some of these other Microsoft and Apple up 20, mid 20s.
Yep.
So
Exactly.
it's you've got these stocks that are sort of old names. Like people just like those names. And the other thing is that they're not banks. So and they have not been affected by the bank situation, which we think is, again, you've had this bank issue the last couple of weeks, and what's happening is, a lot of the small companies, it's gonna affect them because it's gonna be harder to get loans, and so that's gonna be tight. It's gonna cause, like we talked about last week, I think, that the bank situation or debacle, I would say, starting with SVB, was basically doing the dirty work for the Fed now. They don't have to raise rates as aggressively as we thought they were going to, and now it's going to probably slow down, and that's why you're seeing the small indexes not move a whole lot, because I think there's just a lot of concern about whether small companies are going to be able to get the loans that they need to do business. Where you have the big companies, the big tech companies that are cash. I mean, they're cash
Rich.
cows, rich. They're just rolling, and so they shouldn't be affected as much as the smaller things. So I think that's why people feel comfortable going to the Nasdaq again, and then also there's not a lot of financial names in the Nasdaq, really, right?
That's a good point that you brought up, actually. So going back to your small cap comment of small businesses not being able to get loans, Russell 2000, which is basically a measure of the small cap space, only up 2% this year.
Yeah.
So you're kind of right? Like
Yeah.
they're not moving as much as the Nasdaq as a whole.
Yeah.
And then also you're having those big tech names that are cash rich. And while they are tech and they do rely on loans, right? You've seen them cut the fat. We call it trim the fat. They've had some pretty large amount of firings, excuse me, right? They've had quite a lot of people laid off. Salesforce, Microsoft, some of the names right there that have had some massive layoffs. So it's kind of interesting thought. They might have a lot of cash, but they're trying to hold on to that cash and trim some areas maybe where they overhired the last few years because NASDAQ was on an incredible run.
Yeah.
I mean, it had to end at some
Oh
point.
yeah. And so it took the biggest hit last year. So
Yep.
we're not surprised that it's running more this year. We still like the dividend payers,
Absolutely.
longer term. I think those are kind of the place to be because this is a volatile, difficult market right now, and we're getting a little push here, and we don't know how long it lasts. But the fact is, it's always good to get dividends, get paid. To own something, you get a dividend out of it. So we like the growing dividend companies as well.
Absolutely. So you kind of foreshadowed moving forward. We like the dividend payers, kind of a cornerstone philosophy of what we do at the base, having a strong base of some solid names that have consistent dividends, that don't cut them, that actually grow them over time, and then layering in some specific maybe growth or more income-oriented alternative strategies, whatever it may be. But so moving forward for the rest of the year, do you think the Nasdaq is going to hold on to the gains that they've had? 16% is a good year for any
Yeah,
market,
that's great, right? Yeah,
but
it's
they were
really
down a lot, like you said.
good. Yeah. Uh, so who knows? I mean, again, we're not sure. Like after what's gone on with the banks here recently,
Right.
and then the Fed, could raise rates another quarter basis points or maybe two more. I don't think they'll do two. Probably one at the most. And really, a lot of people are thinking they're actually going to be dropping rates sooner than they thought. I mean, we didn't. Earlier this year, we were talking about 24, probably lowering rates, but now the market thinks they're going to do it here late 2023. So we'll see. You just have to wait and see how the companies react, how the next couple of quarters of earnings and revenues look. And then, yeah, it's really like this world. I mean, it's just, there's a lot of crazy things going on, right?
Yeah.
I mean, it's a different time. So again, diversification is key. Emotions are key. I
Keeping
think
those in check.
diversification it's really important right now. So I think we were expecting it to roll in the second half. I still think that's possible. It just depends, how deep this recession goes. We
Definitely.
totally think there's a recession coming. It's just how deep, nobody really knows the depth of it.
It's kind of interesting. We go back to 2022. That's the reason for the large sell-off in the market, right? There's kind of doom and gloom. The Fed was hiking rates at an alarming pace. A lot of companies were starting to lay off workers, even though they were getting rehired real quickly. Thus, the jobless numbers were not as high as we thought they were going to be.
Yeah.
Still pretty healthy job market, labor market as we're talking here. But that was the foreshadowing, right? The market was all worried about recession. They saw the recession on the horizon. Now we're here. I mean, we're not technically in one yet, but the second half of this year potentially recession, and which we thought was going to be the first half of this year.
Yeah.
So again, the numbers don't really matter in terms of when it starts, all that kind of stuff. But the market's forward looking about 8 months anyway.
So
they're
a lot of the
predicting
recession idea was already factored in. That's
Right.
why you don't know right now.
Yep.
The markets are anticipating it, rates being lowered later, the recession not as deep, and so it's already moving up in anticipation of that. That's how it works.
Right.
So yes, we can be fearful of what's happening right now, but the market again is looking out 6-9 months and already, we do. I mean,
Pricing
you and I
it in,
talk
yeah.
about it all the time, and we're always talking like, hey, where's this going? Not where it is today. And so that's why you're getting
Perfect.
a run right here in the market, because you feel like it's not going to be as bad as was anticipated and what was already priced in.
Good.
So we'll see.
That's some good info. Well, thanks so much for watching this week. We'll keep you updated, but please read below some hot some news ticket items that we've got down there. And then if you have any questions, reach out to us.
Thank you all.
Thanks.